Michael, it's good to have you. When we talk about advertising, do we mean quite simply advertising on Amazon.com?
Yeah, that's right. I would say about 90% of their advertising business right now is just sponsored products. And as we highlighted in our note, like, for, let's say, an advertiser like Procter & Gamble and Unilever, the analog I would say to investors is they pay for shelf space and placement at places like Walmart and Target. And this is just where a lot more of the world is transacting, is actually on Amazon. So it's an incredibly lucrative, very high margin business, which we think a lot of people underappreciate.
We know that Facebook and Google are the two leaders in the advertising business. Does Amazon have to take share from them? Are they taking it from, kind of bricks and mortar players, so to speak? How big can this business get, and why is it so valuable?
Well, what I think is $1 of advertising on Google is not exactly akin to $1 of advertising on Amazon. So out of our pivotal advertising insights, our survey work, it skews very high towards CPG on Amazon. And to me, it really is this ability to end up in the purchase path, increase the chance that you basically are going to get bought on Amazon. Now, where it's also super compelling for Amazon, and the way I framed for years is for Amazon, it's the right ad business for Amazon, where people basically pay for placement on the site, the transaction stays on Amazon, Amazon basically keeps the purchase information, and the Procter & Gamble or Unilevers of the world basically have a better quantifiable set of results versus not knowing exactly how well those trade dollars may have actually performed on, the shelf space for Target or Walmart. So I don't really look at it as a shared
and that's exactly what
thing.
you liken this to. Yep, you're saying this is much like buying for shelf space on the internet. Listen, in the grocery store, I absolutely experience this myself. It's almost hard to use Amazon anymore because it's all, kind of Amazon's choice being pushed at you and sponsored stuff everywhere. But that's life. We know that as these things get more sophisticated, they're packed with ads. So you're saying $93 billion of earnings power with advertising. The rest of the street thinks it's only about $69 billion worth. Does it make you uncomfortable to have such a high price target and valuation for Amazon, though, after it's already seen such strong performance? I mean, it doesn't just feel like maybe things are all going a little bit too well to be believed?
I really don't. I mean, I would say two things. I mean, one, I'm discounting back on, I think, a reasonable EBIT multiple for 24. So, my 2 cents is people are going to be valuing the stock in 2024, 2024 estimates in 23. So I think you have a chance of this being a $6,000 stock by then. So it's not that I think they're going to do 93 billion, but what I wanted to frame was people were not understanding the underlying EBIT contribution coming from advertising, A, and B, when everybody tries to do a sum of the parts model, which when companies give more disclosure is the natural Wall Street tendency, I don't really think it's how Amazon looks at advertising. It's really part of this flywheel of retail, prime, and advertising together. So that's really what we wanted to try to frame. We didn't take our EBIT numbers up that high. And look, we also highlighted in the note a few areas we think where conceivable large incremental investment areas could come. But the big ones that I look at, to be honest with you, are a move to same day from one day, which will drive revenues up. And I think that they ultimately will become more competitive with UPS and FedEx, which will also be expensive, but be another increasing TAM element to the story. So I actually don't think it's particularly expensive.
Shepard Smith here. Thanks for watching CNBC on YouTube.